All right, good morning. Welcome back here to Trader Minute. Great to have you aboard. Market been open here for an hour, so let's go out and make any challenge adjustments that need to be made. And the short version is there's nothing that needs to be done here this morning. We have the price of the option down just a little bit with the stock price flat here on Procter and Gamble. So we're not on our auto exit date or anything like that, and there are no new entry triggers here this morning. A few that are getting kind of close, but we'll go out and take a look at them here. But they're not, they're not there and ready to go to enter here this morning. Now, this morning I put a little bit of a note in about the market in S&P futures. And, we talked about this kind of oversold condition a little bit yesterday. And, when we see the market vibe in a bearish mode, the bounces tend to be pretty severe, right? We're talking about a 25-point bounce here this morning, and it's, okay. Yeah, doesn't look like a whole lot, right? But overall, I mentioned this morning, we start to see the overnight level of S&P futures break. The Bulls have some good control here today. And we saw that, and as long as they hold that, I think you can look at most things in a little more of a bit bullish light here today, at least for the day, unless we see some sort of 20K volume come in. And we haven't had any real bullish topping volume for a while. In fact, I don't think we've had it on a single day this year. But on a day like today, there's a possibility that comes in. I don't think it would come in for another, 10, 15 points higher here on the market. But, very clear if we're going to have a reversal here today, the overnight kind of European lows get broken. Then we're talking about a retest of 2,800. Which ultimately I do expect will retest, but so far today, no, right? Nothing there today. Now, you think about what's going on out there in the market, and you think about yesterday's sell-off, and, the U.S. pumped up tariffs, and China raised tariffs, and what's going on with that. I put a note here into the feed, and I'm just going to come in here and grab that. Bear with me for just 1 second. Sorry, I thought I had it on my fingertips here, but looks like I did not. Here we go. Just grab and bring that over. But the focus remains U.S.-China trade as comments from the U.S. and China officials temper trade war fears and attempt to dip buyers. President Trump said he and President Xi will meet in June at the G20, which we talked about yesterday afternoon, right? Suggesting Trump will hold off on additional tariffs for now. Chinese officials indicated the nation does not want a trade war with the U.S., but less conciliatory remarks are also making the rounds, highlighting the still ample downside risk to stocks. A senior Trump administration official cited by Axios said a trade deal with China isn't close, adding there won't be a resolution before the end of the year. Beijing put forth a much tougher stance via editorials and state-backed media, and we saw that last night. If you kind of look at the Chinese state-backed media from last night, there's some pretty hardline rhetoric in that. But this is the important part: a resolution won't be here before the end of the year. If the market knows that, right? If the market knows that, it becomes a uncertainty turned into a certainty. And we saw this happen in March, in February and March, where, you'd have these trade war deadlines and these deadlines for things to happen, and they would come, and things would just be pushed off. And the market would be disrupted for a brief period of time, and then the market would just gradually push on higher. We kind of have a bigger disruption right now, right? Than what we saw earlier this year, but conceptually it's very similar. A big disruption followed now by pushing things off pretty much indefinitely, right? Pretty much indefinitely. There are no more hard deadlines out there. There's no more, we do this by this date then, or else this happens. There's no more of that. It's gone. It's now market can kind of go, okay, tariffs have happened. The sun still came up, right? Still, last I checked, still came up. All right, we know the trade war is what it is. Now we can assess and go forward with that as much more of a known quantity rather than an unknown quantity. And when you think about bullish and bearish markets and how they move, right? Bear markets happen as unknowns rise. Major bear market collapses, they need something structural, right? Like back in 2008. But pullbacks like 2011, 2012, they need a disruption in certainty. And okay, you get that disruption in certainty, it creates a significant pullback, and then as that certainty kind of becomes, or that uncertainty becomes certain, even though it may not be a great resolution one way or the other, right? It starts to at least give buyers the chance to say, okay, we know what it is. We know we can now quantify it, right? It's no longer an unknown. And when we have that, markets tend to go higher. And that's what I think we're seeing this morning. I think more than an oversold bounce in the market, I think we're just kind of seeing the initial stages of that. Oh, okay. Trade war is going to be here for a long time. There isn't a hard deadline that we have to deal with. And, okay, now we can go make decisions based on this. I don't have to worry about, is this deadline going to come and go, and is this going to happen? I could say, hey, you know what? Let me go throw in my models, what I think the trade war impact is going to be. Now I can start looking at stocks and saying, okay, you know what? There's some value here. And I think that's what we're seeing, when it comes down to it. And, if you look at what's moving and what's not, we're not seeing big bounces in tech. In fact, tech is lagging here this morning. We're seeing bounces in, things that, have less of a trade war kind of tone to them, a little more kind of a U.S. revenue growth story to them. It's not in all cases, but, generally that's what we are seeing here this morning on this little bit of an oversold bounce. We're seeing some things like a Caterpillar that was severely oversold, bouncing a little bit. But anyway, that's really kind of what this looks like. And when we have these periods, right, where we go from, less certainty to more certainty, most times it's not a one-day event and the next day it switches. It's a process that kind of takes the market a couple weeks to drudge through. And I would not be surprised to see the market kind of drudge through this process for a little bit, as I mentioned earlier, for 2,800 to be revisited. And it's not going to take, big catalyst to, create that type of movement. Keep in mind, we saw the average true range on the market start to rise last month, at the end of April. And you know what? What do we tend to see? As the average true range rises, what does the market do? It pulls on back. If we start to get, here we are, 35 points. That's kind of the average move in the market right now, 35 points. If we start to get days where the market's moving less than 35 points from high to low, it will give the bulls an advantage. And what we are seeing so far today is that. Right? We're not seeing that explosive, 80-point up day that, would likely get sold into and, revisit to new lows. We have a long way to go here today, but, we're not in that 35-point range. We're, 22, 23 point range here so far today. For those that are uber bearish and want to, sell the heck out of this rally and, really get involved, just take a look at today's opening prices on things. If today's opens get broken, you're talking about the next leg down, kind of coming in. And, that is something that that when you look at past bounces and you see how they unfold, we typically will see that. If we have a day like yesterday, that kind of big, nasty type of day, prior days, open price gets broken. We tend to see the path of least resistance is downward. Doesn't always happen that exact moment, or sometimes it'll take 2 or 3 days, like what we saw back here last Monday. But normally the path of least resistance is significantly lower once the kind of gap up open prices are broken. Okay. All right. So anyway, that's the market. That's kind of what's going on there. If you look at some of the metrics here today, we're not seeing huge changes in them here on the open. You look at the bullish percent index; it's unchanged here. Right, we're not seeing a big change there. All we're seeing really in the metrics is a little bit of oversold bounce off of things, like the number of stocks trading below a short-term 7-day moving average. So we've gone from, yesterday, what was it, somewhere around 12% up here to 30%, and seeing a little bit of bounce in these. But, the big movers, the volumes and the bullish percent index and the cap movers are, market capitalization movers, small caps versus large caps versus, versus mid caps. We're not seeing a big movement there. We're not seeing a big movement in terms of sectors, where, the sector movement is such that it's showing a big reversal. Now the sector movement here today is generally positive. This is something where normally you look at a sector movement like this and you go, wow, this is bullish, and it absolutely is. We have consumer staples, healthcare, real estate, discretionary, and utilities on the bottom. That tends to be a bullish set with energy, industrials, tech on the top. But this is a one day thing, and the dynamic or the change or the difference between it isn't enough to indicate any sort of major change. If you come look over the course of the last month, who's leading the way? Consumer staples and utilities. They're the only two sectors in the green over the last month. Consumer staples and utilities. That is typically a very bearish set here for them. All right, so that's what we're seeing. Now, as far as potential challenge trades and how things are shaping up, there was a trigger this morning on Coca-Cola, right on the open. Problem with Coca-Cola is it shot up too much. It just pushed up into a degree of movement that the probability of further on trend versus the risk of pullback didn't make sense to the algorithm to provide the trigger, and that is one of the safeguards that's built into it, to not kind of chase huge rallies. So had it opened here at 48.5 and just kind of stayed here, I'd probably be in it right now. But it is pushed outside of that norm. It's still bullish, but this was catalyzed by an upgrade here this morning. And you can see here with Coca-Cola has the 3-7 crossover. This is one of the stocks here on the watch list that has stayed above 50 on the Stoke 39.1. And so everything bullish here, but not good enough risk reward there to trigger bullish on the algorithm. We see things this morning like AT&T with a really nice push on up here. 3-7 crossover, pushing above the 3 and the 7 and the 20. The problem with this is it's just not coming off of a higher low in enough to signal that, hey, this is a big bad bullish trend starting to emerge. Now, personally, I really like AT&T. I really think AT&T is a $40 stock trading at $30 right now. And if you look at AT&T and you back this out a little bit longer, and what's been going on here. They've been going through this transitional period, a bunch of buyouts, a lot of questions about their debt. They're having to kind of answer those questions. They've been able to answer those questions successfully. Expectations are very low, and we're starting to see higher lows coming into play here with AT&T. I do believe that this is a stock that above this kind of this May-April level becomes a screaming buy. But from an investor standpoint, stock standpoint, it's just a huge dividend and, something that, the market's going to have turmoil, ups and downs, but it most likely will be able to weather them and, continue to move on higher. And what's really starting to shape up with AT&T is it's, starting to turn into one of the best performing stocks of 2019. And some of that just has to do with where it started, right? But, this is a stock that's up, 15% here? Almost 15% in the course of the year. We're also seeing Verizon with some bullish activity. Now, I talked about Verizon yesterday. We saw it shoot up, almost had a bull signal. Problem is the same thing as with AT&T. We don't have, we're not trading in the upper side of its range. So, normally you don't see brand new trends come off the lower side of the range, and right now it's on the lower side of the range. So it does have the 3-7 crossover, but doesn't trigger here for the challenge. And then Raytheon, which I've mentioned and talked about almost every day. 3-7 downside cross here today. We're still stuck in this, consolidation pattern. It's, jumped and then dropped, and, there's just, it has been kind of fun to watch, but while yes, there is a signal suggesting that it's ready to go on a big trend, we have not seen that trend signal emerge here just yet. This is something that could signal by the end of the day. It would need to trade below 177.40 for it to signal. So it's not there. It need to pull back about $1 from where it is right now in order to get a bearish signal here today. I didn't look at what it would take to be a bullish signal, but I think it would take a little bit more given what the moving averages are doing here today. So those are some of the closest. We're starting to see, some bounce action in some others, and here's Netflix kind of changed its stripes, as we talked about here over the last week. But, it's not a big enough bounce to sell into yet. Same with Apple, nowhere near kind of big enough bounces to sell into or to suggest that, hey, you know what, the trend resumption is on. So for the challenge, continuing to hold Procter & Gamble, and we'll hold this here. I have received some comments about it and questions about it, and things about Procter & Gamble versus the market, and things like that. Here's the bottom line when it comes to challenge trades. The market performance has nothing to do with the algorithm. Whether Procter & Gamble outperforms the market one day or underperforms the next day, it doesn't matter. Those are human things. Those are things that humans kind of look at in the ultra short term, hyper analyze, that just from a real standpoint don't have any bearing. The close or the open on a stock doesn't have any bearing to the algorithm. When it comes down to it, right? There is a signal driven by trend. I've showed you some of the basics of that. And, okay, it's showing a high propensity to trend from this point. Great in it. We know where the stop level is. We know where the price target level is. That's all. I'm not sitting there analyzing the stock or analyzing the price action or looking at it yesterday and going, wow, I'm a whole lot more bullish today because it held up, and now today it's lagging the market a little bit, so now I'm super bearish because it's lagging. Now, all that kind of nonsense is nowhere to be found in the algorithm or in the setup for the challenge, right? I'll leave that to the kind of short-term day traders and all of that. The theorists there. The bottom line is, when it comes down to it, yes, markets affect stocks, right? There's just no other way around that. Markets affect stocks, and if the S&P is up big or if the S&P is down big, it is going to affect the majority of the stocks. But sometimes those effects, they're noise. And when it comes down to it with the algorithm is trying to take out the noise of the market and keep that focal point on the individual stock and, go from there. And that's what it will continue to do here throughout the challenge. And, whether Procter & Gamble surges from this level or pulls back and stops out from this level or anything like that, that's what the challenge will do. Now, one thing interesting we are seeing with Procter & Gamble, and, you saw yesterday, if you were watching the option closely, you saw yesterday the option was green when the stock was down. And now today the stock is flat and the option is red, right? That's very normal. That's very normal in terms of the implied volatility. And I made the comment in my note this morning that one of the things we're going to see today is with the implied volatility dropping, we're going to see some put options get hammered, especially out of the money put options. So you take something like an Alibaba and you look at some of the put options and where they were yesterday, something like a 165 out of the money. And you look at kind of how it traded yesterday and where it is today. I mean, yesterday at the close, it was $3. Now it's what, $1.10? $1.17? I mean, the stock's only moved $3. This thing only has a delta here of 20 cents. To go from $3 down to $1.19 when there's a delta of 20 cents, it was probably 30 cents going into the day, so it should have lost about $1. It's lost an additional 80 cents or an additional, 25%? That is implied volatility. And it's one of the reasons why chasing puts on a day like, yesterday and into close, and I mentioned it is very tough, because if you are wrong, you're going to be wrong big because of the way the implied volatility gets sucked out. And that's one of the reasons why looking at rallies to sell or to buy puts, buying puts on these kind of oversold bounces is a lot better strategy from an option trading standpoint. Excuse me. Sorry about that. Now, what it means is that sometimes you miss it, right? Today the market were down 100 points. You're looking and go, man, I wish I would have bought puts yesterday, right? That type of thing. But we're seeing a lot of that, happen here. We're seeing a lot of the implied volatilities getting sucked out of some of these names, especially some of these names that, have moved pretty big here. One last stock I want to show you, KB Home. We've talked about this several times this year, and we've talked about the just changing nature of this stock. The changing nature of the industry and the way investors are looking at it. We have KB Home here today hitting a new high on the year. You think about all the things the market have gone through, and we have a stock, a home builder, no doubt, a home builder of all types of stocks hitting new highs on a day like today. It's got a lot more room to go. Is it going to go there tomorrow and the next day? Who knows? But this is one. We continue to see major higher lows come in, major higher highs come in, and the volume pattern remains very bullish here for KB Home, and continues to be a very strong name, one of the strongest here this year. Not immune to recession or pullback or anything like that. But, when you have a stock that's setting a new high, when the market's gone through what it's gone through, those stocks that are setting new highs early, they tend to continue. If there's a continuation bounce in the market, they tend to continue and lead the way. KB Home's trading at a PE ratio of 9. So yes, it's had a nice rally, but it's still trading at a PE ratio of 9. Its book value is 24, right? So this stock was just priced for bankruptcy essentially. Its book value is 24, so it's not expensive. Its PE ratio is 9. It's absolutely cheap. It has earnings growth rate of 52% this year. Can't find that in tech names, right? You can't find that in tech stocks. So, fundamentally has so much going for it. It's what, almost 7% short, somewhere around that, 6 to 7, I believe, percent short. I don't have the numbers in front of me. But, there's still a viable short interest to continue to keep it pumping on higher here. And, one that if you're looking for from a, investor side or even a trader side, definitely worth looking at KB Home and having that on your watch list and, looking to play that higher. If we back this out to a monthly chart, you'll notice a big transformation here. For the first time since the housing collapse, major higher lows with higher highs. I mean, it's any way you want to call it an upward trend, it's an upward trend. Is it going to 70? No, it's not going to 70. It would have to do some pretty transformational things to get to 70, but to trade back into the 30s, yeah, absolutely. Thanks for hopping on. Have yourselves a great one, and we'll talk to you later. Take care.